It is only entrepreneurs who are making a capital gain of more than $6.25 million in a year who will be paying a little bit more.
So that's Finance Minister Chrystia Freeland touting Ottawa's new proposed capital gains tax changes, saying the move will only affect 0.1% of Canadians. Others say it will stifle small business and investors looking to enter the market. Here to break down what it all means is Peter Sashecki of Everything Financial. Good morning, Peter. Good to see you. Thanks for joining us.
Good morning. Nice to see you, Carrie.
Okay, so a lot of discussion around the capital gains tax recently. People want to know who is going to impact the most. So we're hearing that it's going to affect the super wealthy. Is that the case?
Not really. No, unfortunately, it's not the case. The super wealthy are super wealthy for a reason and have very good tax planning situations to minimize the capital gains. It does affect them, but it's a drop in the bucket. It really affects middle-class Canadians who are trying to get ahead, buying an investment property, who have done this on the assumption of a capital gains inclusion of 50%, and now it's 66%. That's where the biggest amount of money is going to come from.
Okay, so let's dive in more. What type of items are affected by this kind of tax, and what are the exemptions?
Well, pretty much everything you make a profit on, but the most common thing that everyone's talking about is rental properties. Buying a condo, buying a townhouse as a rental property, trying to get ahead, make a buck. You know, you've got renters where on $100,000 before, without getting too technical, your taxes would have been about $25,000 per $100,000, and now that's gone up to $33,000. Based on a gain of over $250,000, kind of is how it works out. So there's going to be less of the entrepreneurs in the middle class area diving into this because they just can't afford the amount of tax they're going to have to pay.
And there are, the government says that only 0.1% or 0.1% of Canadians are going to be impacted. So who is going to be impacted the most then?
Anybody. See, the thing is with the super rich, what they call the super rich, if you took all their money and they just donated everything to the government of Canada, it wouldn't even make a dent in the national debt. And that's an economic fact. I said, anyone though who makes money, if you're investing money in the stock market, so not money that's not in RSPs or not in TFSAs, that profit on that investment is taxed more than it was before, of course, assuming the budget gets approved and this all goes into effect on June 25th. Anyone buying a property, anyone who's buying something that they have to declare the gain on is affected. And that can be anyone in Canada, you, me, anyone watching this show who's trying to invest money and get ahead and just make things a little better for themselves, their family, their kids coming up who want to get into property. All those people can be affected.
So how does the tax impact, and you kind of touched on this, investments like stocks and lead to lock-in effect where they only retain existing investments?
Well, the thing is, this isn't grandfathered at the moment, but if you have stocks or investments, the good thing, and we talked about this, I think, a bit last week, Carrie, too, is a lot of times those investments are split between interest, dividends, and capital gains. And a lot of that money you might invest in stocks and some sort of investment, in cases, is also considered return of capital. So part of your base that you've put in that you've already paid tax on. So investments would be, or could be, depending how you structure them, taxed significantly less than a piece of property like a condo in downtown Vancouver, a townhouse or something. So a little more favorable tax-wise, not because the whole thing is not capital gain, therefore the whole profit is not affected.
A lot of discussion around inflation. How will this tax impact that?
Well, I don't know if the overall tax will affect inflation really, but the overall spending is what economists are worried about can affect inflation. When you put more money into the public through a lot of the spending programs, that can affect inflation. And we saw that back with COVID. COVID and people not being able to spend affected inflation partially, but COVID wasn't the only effect on inflation. It's just general more money being put into the system through government spending. And to be fair, that can be the federal, it can be the provincial, it can be the municipal level.
Right.
Anytime you put more money into the system, you can have inflation.
All right. Peter Stashecki with Everything Financial joining us this morning with more on the capital gains tax. Thanks for that, Peter. Have a great day.
Thanks, Carrie. We'll see you next week.
You bet.